Dr. Baba Saheb Ambedkar Open University.
Hello, my dear friends. Welcome to Dr. Baba Saheb Ambedkar Open University, Ahmedabad, in Chaitanya Studio of Dr. Baba Saheb Ambedkar Open University, Ahmedabad. In the video series lecture for the course BBA in the subject Management Accounting, today we discuss the Block 4, Unit 1, Budget and Budgetary Control. Now, when we start our session for this particular unit, we have to evaluate what are that learning objectives. So first learning objective is that defining, and we can say the definition and characteristics of budget. Then meaning and definition of budgetary control. Then objective of budgetary control. Then advantages and limitations of budgetary control. Let's begin our session with the introduction part. The complexity of the modern management problem has led to the development of various tools, techniques, and procedures which may help the management in resolving the problems they face. One of these important tools is a business budgeting. The modern management have now realized the importance of planning their business operations in advance. They know that the success or otherwise of the business activity depends on careful planning. The management prepare themselves to face successfully the possible advertise by visualizing them in advance and can also avoid or minimize the errors that may inflict a heavy loss on the business. The management endeavor through the business budgeting to give a definite direction to the activities of their organization. One of the important functions of management is to plan, to coordinate, and to control the operation of a business, or we can say a particular business organization, in such a manner that its basic objectives may be realized. In fact, budgeting is necessary in all walks of life. Even an average person has to make an estimate of his monthly income on the one hand and the monthly expenditure on food, clothing and other basic requirements on the others. If it estimate the expenditure exceeds the estimated income, he will try to curtail expenditure on some of his requirements. In this case, he uses the budgeting as a tool of control. And of course, individual budgets exist only in the mind of the individual concerned and are rarely available in a written form. But they are not different from the business budget so far the objective is concerned. Through the latter are more carefully devised and take a longer period of time and are not unwritten way. Now let's defining the budget and the characteristics of budget. A budget is forecast of future activities. It is a chart of future incomes and expenditures. It is a coordinating financial plan for a business enterprise, or we can say the business organization. It includes estimates of sales, production, purchases, labor cost, overheads, and financial positions. The Institute of Cost and Management Account in England has given the definition of budget in such a way that budget is an financial and or quantitative statement prepared and approved prior to a defined period of time of a policy to be pursued during the period for the purpose of attaining objectives. It may include income, expenditure, and employment of capital. Let's move to the further discussion about the definition and the characteristic of budget. The above definition make it clear that the budget are prepared to achieve objectives and the target of a business. It is prepared for a definite period of a future time. It expresses targets either in a quantitative terms, of in a financial terms, or in a both. Then let us move to the characteristics of the budget. The first characteristics of the budget is it is an important instrument of control. The budget reports indicates whether and to what extent have the original target been realized, and moreover the responsibility for the different operations are clearly located before the budgets are framed, and hence the activities of every executive can be easily evaluated and controlled, and thus the budget serves as an instrument of planning and controls both in nature. Let's move to the second point, that is continuous process. The framing of a business budget and its implementation both go hand in hand, and at the same time control is exercised over the actual operation of the business to ensure that it does not deviate from the plan of action as indicated in the budget. The actual performance of the enterprise is compared with the budget results, and if any discrepancy is observed between them, an attempt is made either to revise the targets of budget or to take corrective measures also. The third point is that it is the plan not only of the resources of enterprises but it operational as well. So the target are fixed for all the aspect of the operations of the firm, and estimate the expenses and revenue involved are stated precisely, and the budget covers all the activities of enterprise, the amount of the resources that would required for each activities, and we can say the arrangement is made to obtain the resources at the right time, and it also suggests therein. So we can say that, my dear friends, it is the plan not only of the resources of enterprises, but it helps in operation also. Now let's move to the next point, that is, it is a comprehensive plan of a business. In the sense of that it covers all the aspects of the business operations, or we can say the business organization. And of course, my dear friends, each head of the department prepare the budget pertaining for their requirements to operate its own department efficient manner. But finally, the overall budget has to be framed on the basis of this departmental budget. And as a departmental budget, independent from the other similar budget, has no meaning in nature. But if the departmental budget play an important role while you framing the whole budget of a particular business operation, at that point of time, my dear friends, the departmental evaluation is most important in nature. As we studied in the block 1, there are the different tools and techniques of management accounting. So it is also the comprehensive plan of business. The next is, it is an integrated plan. The budget committees or the budget officers has to reconcile and coordinate various budget prepared by the heads of different departments in the unit. The production budget and the sales budget. And for example, it should be so devised that there is no conflict between them. And if the basic objective of the enterprise are not kept in view while preparing the budget of various departments, there will be no consistency between them. And in that case, the departmental budget will do more harm than the goods. The good. Ultimately, it a harm in nature, because it is ultimately what, my dear friends, it an integral part in nature. That's why. Next is, in a future, it covers a definite period of time. The target have no meaning unless they are linked to definite period of time. For example, a company may envisage a total profit of rupees 1 lakh, but if it does not specify the time period within which this profit is to be made, its target loses its meaningful, or we can say the meaning. On the other hand, if it is decided that the profit of rupees 1 lakh is to be made during the year, it is then the possible to prepare a concrete plan of the action to realize the target. So far as a time period is concerned, there are two types of budget, that is a long term budget and second is a short term budgets. And for instance, to earn a prestige as a firm making the most reliable product, the market may be a long term objective. Then the short term budget may be framed to show that gradually the company concern move towards the long term objectives in nature. The next point is that it is expressed in a financial form. In its original form, the budget lays down its target and estimates in physical terms. For instance, estimates of sales are expressed in a physical unit of the product. But finally, these estimates are converted in monetary units. So ultimately, it's defined in a monetary way, or we can say that in the money form. So it ultimately defines what, my dear friends? That define, or we can say that express the financial form. Yes or no? So on that, the reason is that physical unit used to express the estimates and the targets are not same in all sectional budgets of the enterprise. For example, while magnitude of the labor is expressed in the terms of man days, the quantum of raw material is indicated in the term of kilogram or unit. Eventually, they cannot be arranged, or we can say the aggregated, unless they all are expressed in the terms of common unit, that is money. So ultimately, my dear friends, it is expressed in which form? In a financial form. Let's move to the another discussion, that is meaning and definition of budgetary control. The budgetary control is a process which covers making of a business budget, comparison of actual performance with the budgeted ones, and detecting the error and the mistakes committed so that an attempt may be made to rectify them in the future. According to the Moore versus Jagdine, or we can say that according to this definition, these two learned fellow definitions given the budgetary control over there, that is, budgetary control is using the budget as a tool of controlling the actual operation of a business. So ultimately, what, my dear friends, they ultimately define that it ultimately controlling of what? Your actual performance of your business. And for that, my dear friends, you learn in a block 1 also, you have to define particular technique or tools over there. After preparing a budget, the budgetary control play an important role in a nature. Next is the Institute of Cost and Management Accountants, London, that ICMA, defines that the term budgetary control as the establishment of budget relating the responsibility of executives to the requirements of the policy and the continuous comparison of actual and budgeted result, either to secure by individual action and the objectives of that policy, or to provide a firm's basis for its revision. And on that basis, we determine some of elements of budgetary control. The first is to prepare the departmental budget. As we learn in a budget, that is departmental budget is very important in nature. So it ultimately, while you are in a field of the budgetary control, the departmental budget is important in a nature. Then, to coordinate all departmental budgets so that all activities of the enterprise may be integrated, and to compare actual results with the budgeted, or we can say the estimates, so that the variances may be detected and removed. Now let's examine the objectives of budgetary control. The basic objective of budgetary control is to lay down the goal of a business so that available resources may be utilized most efficiently. To be more precise, the main objectives of the budgetary controls are to define in clear terms the basic goal of business, to inform the persons concerned of these goals, or do we can say to chalk out the detailed plan of action, then to coordinate the various activities, or we can say the departments also, in such manner that optimum utilization of resources can be exist. Then to provide a method of evaluating the actual activities. On that, let us define the first point, that is defining basic goals. In essence of budgeting implies determination of basic goals and formulation of a short-term plan to achieve them. Thus, the budget establishes a harmony between the long-term and short-term goals of the enterprise. For the achievement of a short-term goals, targets are fixed. This target help in the realization of goals in two ways. One is through the providing proper information, and second is by providing effective incentives. And the detailed targets are the fixed for the various operations, which makes it easy to know who is responsible for what, and also the performance of executives can be evaluated in the light of these targets. So this encourages the executive to improve their performance, and the target clarifies the basic goals of the enterprise. While you have information, while you have incentives, at that point of time, my dear friends, your employees work together in an efficient manner, and ultimately your target clarifies that the basic goal of particular business, enterprise or organization. Let's move to the second point, that is communicating the goal. It's a clear, in fact, the budgets are prepared mainly to inform the executives and employees at all the levels about the basic goals of an enterprise, or we can say the business organization. It is the duty of the top executives, or we can say the top management, to make the low level officials aware of the work they are expected to do, and thereby the low level officials come to understand the basic goals of the enterprise or organization, and this understanding motivates them to make an efforts to realize them. So it's ultimately to communicate the goal to top to bottom level of your enterprise. This is the most important feature, or we can say the objective of the budgetary control. The next point is making a plan of action. The budget are prepared with the view to make a plan of action so that it is clearly known what is to be done, how it is to be done, and by whom it is done. This is necessary to avoid misunderstanding on the part of executives and the employees. And moreover, the persons concerned can have the proper guidance as to the direction in which the efforts are to be made. And truly speaking, the budget shows the path towards the goal of enterprises, and it represents a time bound programs showing what is to be accomplished within the definite period of time. So ultimately, while you preparing budget, at that point of time you have to prepare and you have to clear in your mind that making a plan of action for that also important in a nature. Let's move to the another point, that is coordination between the various activities and efforts. The budgets are prepared to ensure that the different departments of the enterprise and do not operate inconsistently, and their activities must be oriented towards the goal of enterprises. The budgets of the production department must not provide for the manufacturing of the product, which is not possible for the sale department to sell. And for that, the sales department must not provide for the sale of the product which production department cannot produce in a required quantities. And the purchase department, the budget avoids such inconsistency between the behavior of the different departments, and thereby it avoids the imbalance and the wastage of the resources. And while preparing the budget, the heads of the various departments, just like in production department, sales department, distribution department, etc., research and development departments, are therefore required to keep the contact with one another constantly. So ultimately it's defined what, my dear friend? Coordination between the various activities also. Next is to provide an instrument of control. Ultimately, while you are defining or determining that departmental budget and constantly coordinate with them, it ultimately define its instrument of the control. Yes or no? So since the budget represents a detailed plan of operation, the responsibility of each department, officials, employees get the fixed, making it possible to evaluate it is an objective manner. And the periodical budget reports are prepared the departmental wise, in which the actual performance is compared with the predetermined targets of the budget. And thus we can say that, my dear friends, it is nothing but to provide and a control over that particular department also and the overall budget also. So these are the objectives of the budgetary control. After watching this video, after completing this session, you have to evaluate yourself in three aspects. The first aspect is write a long question. Second aspect is write a short question, and third aspect is to check a multiple choice question. And for that, if you learn more, then you refer more books. So first aspect, that is long question, write a first question's answer, that is describe the characteristics of budgets. Then describe the objectives of budgetary control. Short question is define budget and define budgetary control. Third aspect in a multiple choice question, the first multiple choice question is that to control the operation of a business organization given on the basic followings is not the important function of management. First, to plan, yes, it is a It is the function of management to coordinate, yes. To control, yes. To be dependent, no. To be dependent is not a function of management. Second question is, a budget is forecast of a future activities and it is a chart of future income, future expense, or both, and none of the above. So answer is both. It's defined future income also and future expenditure also. Okay. Then if you want to read further, then you may refer these books provided for this particular unit or particular block. And after watching this video, after evaluating yourself, I must advise you to kindly refer the material also, which is most important in a nature. Hope you learn well in this video. Thank you very much, my dear friends.